Top focus on World Business Watch today. We look at what analysts expect from the new coalition government's full budget. India's upcoming budget is expected to continue prioritizing capital expenditure, given the government's emphasis on large-scale infrastructure projects. Take a look at this next report for more.
Infrastructure continues to boost India's growing economy. Investments in vital infrastructure such as roads and railways account for a significant portion of total capital expenditures. Spending like this has a multiplier effect on a country's GDP, employment, demand and trade. The private sector will keep a close eye on the full budget after the interim one in Feb showed the same intent. In 2020 and 2022, private capital expenditures were significantly lower than expected because of global uncertainties. In 2023, on the other hand, private companies increased their allocations for big projects. The government is expected to allocate about $120 billion this fiscal year for capital expenditure. Experts predict a minimum 10% increase in that number in the full budget. Ever since the pandemic, the government has been spending a lot of money on big infrastructure projects. Capital expenditure has jumped more than 100% since the 2020-21 budget. Amid the world's economic downturn, this has aided India's performance as the best-performing major economy. The private sector in India reported an increase in capital expenditures last year. Indicative of India's economic buoyancy, the spending in the last fiscal year was 40% more than the average over the last decade. Private capex could be shaded by the important cues provided by the next budget. Infrastructure is expected to continue bolstering India's growth prospects. All eyes will be on the upcoming budget announcements this month. Business Bureau, WION World is One.
And to discuss this further, we're being joined by Mohan Das Pai, who's the chairman of Aryan Capital Partners. He's joining us live from Bengaluru. Welcome to World Business Watch, sir.
Thank you.
Thank you. How do you expect capital expenditure to evolve in the upcoming budget, sir, given that this is a major factor in fueling India's economic growth?
Well, first, let us look at the economy. We are $3.6 trillion as of March 24. For this year, we may cross $4 trillion. There's a 95% probability depending upon the rupee-dollar rate. The economy is in great shape. The banks are in great shape with very low NPA, very high profits. And last year, we invested more than $1 trillion in capex as a country, of which the government put in nearly $250 billion. Now, in this year, we're supposed to grow maybe 7.5. We could cross 8 because the first quarter has been very good. And government revenues are up, income tax is up, maybe 22-23%, which is very good. The GST has gone up. So revenues are going to go up. So if you look at the budget, there is an increase in revenue for the government already because the Reserve Bank of India is giving a dividend of 2.11 lakh crores as against 50,000 crores, I think, budgeted, plus the dividends. So they may get an excess 2 lakh crores more as a non-tax revenue because of the RBI dividend and more dividend from the public sector. So revenues are going to go up. Tax collection may go up by another 1 to 1.5 lakh crores compared to the budget. So revenues are going to go up by maybe 3 to 3.5 lakh crores. And that is very, very good. So I think capex was budgeted 11 lakh crores. And I think it may go up by another 1 lakh crore, 12 lakh crores, because it is not increasing capex that is important. What are the absorption capacity of the economy? You must remember that a lot of the capex happens in the states too. And the states don't have the capacity because the first quarter is gone because of the election. Even in the national level, the first quarter has not been very, very great for capex. So I think we got 3 quarters. So can the economy absorb? It's not a question of money as much as the economy absorbing. Second, I think the budget being the first of the next 5 years has to tackle a very serious problem, that of a lack of purchasing power in rural areas. 50% of India depends on agriculture and rural area. Their income, per capita income is only 73,000 rupees because they depend on agriculture, as against 2 lakh rupees for the whole economy. And I think we require a DBT, whereby possibly for about 10 crore women who get the free gas or a subsidized gas, that's 100 million women, the government transfers 2,000 crores a month to give them purchasing power. I think a direct injection of cash at the bottom of the pyramid to improve purchasing power and to take care of the restive rural population required. So we're going to see a big social program in giving a DBT in transfers for housing, improvement in water, and everything else to make sure that the impact is felt. And on the taxes, I would think that the middle class has got a raw deal over the last 5 years. They suffered heavily because of inflation and high taxes. They require a tax break. I expect a simplification of the tax structure for them, because all the tax breaks that the government gave in the last 2-3 years were a chimera. They gave a lot of breaks for housing, but only 10 million or 1 crore people have housing loans. And about 7 to 8 crore people pay as taxes on their salaries. So I think that has to expand. I think so. It's going to be a defining budget.
Yeah. I mean, I'm getting your point, sir. You did mention, of course, that, absorption of this capital expenditure is also going to be playing an equally important role. It's not just increasing capex. What role do you feel the private sector will be playing in supporting the government's ambitious infrastructure plans?
I think the private sector will be going all out, because the private sector debt has come down. The total profitability of the corporate sector, listed and unlisted, is 15% of GDP. Pre-tax profit is 15% of GDP. That's very high. In the last 2 years, they got pre-tax profits about 85 lakh crores. That's $1 trillion. They paid back the debts they invested. So I think they will also invest. Invest for maintenance capex, for expansion. And even in infrastructure, you are seeing the road companies have better balance sheets. They're going to bid more aggressively. But the problem is government is not tendering out more roads. That's the problem. The problem is the tendering process for roads has come down. The railways are chugging along with capex, but the absorption capacity seems to be limited. Many projects are behind schedule. Even if you talk to the big construction companies like L&T, they say there's a problem of shortage of labor. Can you believe it? In a country where people say there's increasing unemployment, there's a shortage of labor all around for construction and for infrastructure. So I think the key for this year is going to be how much can the economy absorb in terms of spending, not the total quantum of spending. We have to increase the absorption capacity of spending. We're also going to see more foreign investment come in. The capital markets are doing reasonably well. Huge amount of money is coming in from the local market. Even the foreign capital does not come is okay. Private equity is going up. Now with the interest rate scheduled to come down in the US, there'll be outflow of money. So I think this is going to be a very good year, but we want a great budget, which eases the path for investment, for job creation. Because the budget should focus on job creation. Creation of jobs, well-paying jobs. Because jobs are the #1 priority for India.
And definitely.
Because we have about...
Yes, the private sector will be going all out to make the most of this. And of course, absorption, as you mentioned, is going to be a key issue. And of course, shortage of labor is one concern, while reports suggest that there is rising unemployment. A lot of these reports don't stem from India anyway. But thank you so much for joining in, Mr. Mohandas Pai, and sharing all your insights. That was Mohandas Pai, Chairman, RN Capital Partners, joining us live from Bengaluru.